So this is the last segment of the video, and here I'm going to talk about what I'm expecting to happen in the next week. Now we are on Monday, and the significance of this day is that we are starting a new monthly candle in a day's time. So I'm going to go my analysis of the monthly for this time only, because this is the start of a new month and I want to project things that could happen. I want to see what could happen in the next month. So we've created relative equal highs with this month, with the month of April the 1st, the month of April 2022. We've created relative equal highs with it, but we've taken out a week's high and then we traded below, so we're down here. So this candle is looking quite weak. So I'm basically going to see how we closed during this. What is the percentage of buys and sells in this candle? So I want to see, are we 50%? No, we're not. We're slightly below the 50%. So if it goes higher, if it was higher, this would have been a very bullish candle. If the what's it called, where the price is at right now is higher, that would be a bullish candle. But it's slightly below, but it's still the candle is white. So this has been a bullish month. But there has been a considerable retracement out of this fair value gap. There's been considerable retracement out of it. So long term, it could come down to this level, which is a proportion block, because what it done was, this is an order block, because look, the lows got swept. When this is bearish candle, the lows got swept, and then we broke the highs right there. We've broken the highs, swept, and traded on the open of that candle right there. Traded on the open of that candle, made a high. So this could be a proportion block. So we could start the new month going here, trading down to here, and then going up. We could do that. So my overview for the month time frame is bearish. We could just see a decline down into this open. Okay, let's go down to the daily time frame. Daily time frame, we've had considerable retracement down when we took out this high. Taking this high out, we have this big retracement down. Okay, and what I'm looking for right now is what we have done. See all the trend line, or the support resistance traders, they've been buying here. I mean, we bought it as well, so there's no shame in saying we bought from this area of resistance to support. But then market, what did it do? It came back down to here with this bearish day. So I don't think this narrative of buying from this region is viable anymore. Another reason being, these are relative equal highs that were swept, and a break, like a break beneath here, and a closure. I think there was a closure on this bearish day, which is the Thursday, 27th July. There was a closure, and it opened just to rebalance this whole, area. So this was the Friday's price action, which was rebalancing the whole thing. Okay. So this is our swing low, which is our buy side liquidity, long-term buy side liquidity, and this is our long-term buy side liquidity too, because there was a significant retracement down from that level. So this area is kind of is long time, but I don't like the way these are relative equal highs, so I'll probably use this, because look what it did to the high of that candle. It took out the high before dropping and closing this fair value gap. And we've traded off this fair value gap, broke down. So this is our level of, this is our dealing range from this high to this low. So this is our buy side liquidity for this week. I think this week either this high or this low will be taken. So these are our short-term buy side and sell side liquidity. So the market will take, I don't know, the next 5 days to either go beneath it or either to go above it. I don't really have a bias when I draw these out. I just know one of these levels will be tagged in the next few days. Cool. And you can see this low to this low is a stronger level of, is a magnetic area for price to go at, because this low and this low, they both form sell side liquidity, but they all form relative equal lows. So these are relative equal lows, this day and this day. So Monday the 11th of July and Friday 28th of July, they're both relative equal lows. What do we have beneath them? We sweep these 2 days lows right there. That's a sweep of the lows, and breaks above this level. See that? So this was the point that we decided to go higher, target this liquidity, and eventually stop here, which was the 131 big figure. 131 big figure right there. And this is 1.27 600. So these are relative equal lows in this level. So I'm looking to this level right there in the middle of this two areas as your bullish order block. It might not be as beefy as this candle, for example, but there's still volume in here, and I consider this as bullish order block right there. So if price comes down, taking out the sell side liquidity down here, I'll be looking for buys. But I need more precise areas, so that's why I go down to the 4 hours and I turn on the sessions. Sorry, not the sessions, the weekend, Saturday, Sunday. So stronger areas of PD arrays, or stronger PD arrays are the open. Sorry, let me rephrase that again. The PD arrays have a hierarchy. So any PD array, like an order block, can't be as strong as an area that is a session open or a daily open or a weekly open. Do you get me? So I could just draw any down close candle and say that's an order block, or this is an order block right there, because price came back down and price will come down to it. But it's not as strong as me opening the Sunday open of this day, which is right here. So that price right there, that's a Sunday open of a week that we can tell. So this week is the week that begins on the Monday 3rd July to the Friday 7th July. So it's that week, and that's the open price of that week. So that area is a very significant area. So if the market comes down to there, it will use this as manipulation, these relative equal lows, and we can go buying. That is stronger PDRA for me than just choosing any area of down close candle around here and saying that's your order block, because that's not your order block. Basically, it's not. And I can use areas of confluence like the previous week as well. Open price is there. See right there. So the gap in between the week I mentioned before and this new week, the week prior to that, is here. That's how I get my grey areas. So there's a high probability of the market coming to this grey area and going higher from there because it coincides with 2 weeks. It coincides with 2 weeks Sunday open prices. See that? Okay. And if it goes beneath this, I don't think there's anything here to be looking for. Then you could look for, I don't know, down close candles around here on the session time frames. Because look, the weekly opens are here and the weekly opens are here, and this area right there doesn't have any weekly opening prices. So it only has probably daily open prices. So I'll probably get the 12 a.m. for this Friday and this Thursday and this Wednesday. I will get some time and I'll project it out. And then in between them, I'll draw grey areas like this. And that will be my high probable order block. And if the market fails, then I'll target this sell side liquidity right there. But if it goes beneath there, if it goes beneath here, this would be used as sell side liquidity. This whole level is going to be used as sell side liquidity. Market goes beneath it, goes higher. So that's how I will navigate if the market comes down. But I don't think that's any relevant to now. This level is not relevant now. But this is, because we're closer to trading to here than we're going to be trading to there. Okay, so if we go below here and we're around here, I'll be looking for buyers around there to go higher. Cool. So the question is now, what do we do from here? Where we are right now, what do we do? What we do is turn this on. Remember, we still use the Sunday open prices right there, right here, right here. So looking at this, we are inside the Sunday open price of last week and 2 weeks before. We're inside that grey area right there. So I personally believe the opportunity for you to buy will be from here. If you want to buy, if you find the setup, it will be here. Definitely, it will be right here. Then you could target this fair value gap right there, and you could be selling it from there if you want to, because I think the sales are more viable. Honestly, if it comes up to here, to this fair value gap that I'm looking at, when it comes up to here, I'll be looking to sell it from there. For where I'll be looking to sell it from there, I'll probably refine this whole area down to, I think, the Thursday open price, which is around somewhere here. I'll refine it down to there. That's going to be my PDRA on the 4-hour time frame. But the fact that we've taken out this low indicates to me any highs or the market going higher will just be met with drops down to clear this relative equal lows. This and this are relative equal lows. Another thing is this low that market has created, this higher, failed to project. I mean, it's a hard called failure. It failed to go and create a higher high, and it came back down aggressively. So this will probably be used as liquidity, and I think this low will be taken in no time. These low will be taken right there, and the number is coincidentally 1.2600. That's a good number. Every person will be trying to buy it from there, but these form relative equal lows, and you should only be looking to buy once it goes below here. But for now, I'll be looking to sell it from here. When it comes down to here, I'm selling it down. But my only concern is, turn this off, of selling it is this. You see, all the trendline folks want to sell it from there. They all want to sell it from here. Therefore, I believe anything at the close of the FEG. I think this FEG will be used as IOFED. Only parts of it will be filled. Only probably up to 50% will be filled, rendering the fill of the whole thing useless. It's not going to fill the whole thing, because that will give opportunity for the trendline folks to start selling it. You don't want that. You want to abruptly go higher just to sell it. That's what you want to do. So I believe this FEG on the 4 hours will go higher, but just to sell it. Okay. So that's my trade idea for the week. I'm looking for this FEG right there, and if I can get any selling opportunities from there. Okay, we go to the 15-minute. Markets don't top off like this. You see, if you're looking to sell it from here, yes, it's viable, because look, we've taken out this session high. Where is it? This London open kill zone of Thursday, we broke above it, so we could have been selling it on Friday, but markets don't top off like this. They don't, because these are all relative equal highs. You see how these highs are forming? They're all relative equal highs. Therefore, we'll wait for market to go to an area of discount before we buy it. That would mean using this area as liquidity. So this is my 15-minute analysis. I'm using this. My 4-hour analysis is this level. It might not even reach there. So that's why I'm doing the 15-minute analysis for now. So you see, we closed above it. We closed above that level. That's indicative of the market wanting to go higher, sweeping that high, and then going down. So that will validate our 4-hour analysis. So what the buyers will do is then go below the lows here. Probably the 50% from this leg to this leg. There's an FEG right there. And also there's a breaker block around here. See this whole area, up, down, up. This whole thing is your breaker block. You didn't see that coming. This whole area is your breaker block, essentially. So if you find the setup going long over here and a sweep of that low, I'm looking to buy up to this buy side liquidity and probably tapping to this FEG, because these FEGs are more pronounced. They're more aggressive down, so we need to fill some of them and go down them. But before that, we're looking for the sweep of this low, find the buys, and then basically get rid of all of this trash. Look at this. These are all relative equal highs. Market just created this invisible barrier that people are jumping in and saying, oh, the market has stopped. It doesn't want to go here. It doesn't want to go above here. It will stop here. So every Tom, Dick and Harry wants to sell it from there. They want to sell it, because that would mean is that area of support turn resistance. So you want to sell it, but the cells will only work when we go down, take out this sell side liquidity, sweep that low. Because right now we're not sweeping the lows right now. What we're doing is we're breaking down the lows, so we're bearish now. See, after we've taken out this low, we're bearish. We're respecting this area of a mitigation block. You see, it didn't create a high, but market broke beneath it. That's your mitigation block, but that's not in my model, so I won't be trading the cells. Even if the cells are short lasting and they can go down to this low, I'm not going to be selling it from there. But I know the fact that they will use this mitigation block right there, right here in that green area, to take price down lower, to take out this sell side, and then propel price higher to take out these relative equal highs. Okay, so that's all I care about for now. Any PD arrays in here, you could use them. You could essentially just use them. So I really think this is a really good area to buy it from, because you see that last bullish candle that took out liquidity to the downside with the FVG, market failed to respect it. We traded on the top of it, traded above, failed to create a high from there. If we come back down to it, we'll use that liquidity and then go down to this FVG right there. See that FVG on the 15 minute? That one over there, we'll use that. And that will mean around 10 pips below this level, just to go higher. So I'll be looking for, if we trade below this low, and I can take a buy to target this buy side. That's my first TP. So this buy side is my first TP, and the lower quadrant of this FEG, which is 0.25%, so which is around here, and that coincides with 1.29 100. That'll be my second TP. But I'm sure if we go above this thing, we'll dig into here, dig into this level. And then I'll be looking for a Judas swing above this high. The Judas swing, I don't really care how long it takes. It could take 20 pips, it could take 30 pips, but I'm looking for the Judas swing above here. And obviously the timing aspect. This drop has to happen during either London Open kill zone or New York kill zone or the London close kill zone. But tomorrow, as I'll bring it up, tomorrow, which is Monday, today, which is Monday actually, sorry, is the volatility is looking non-existent. There's no news coming out, so probably by Monday we'll get the buy. Probably by Tuesday we'll take out the liquidity, probably form the high of the week on Tuesday, and then be there for the rest of the week. And also this is NFP week, so price can go either way, but I'll be trading after NFP or prior to NFP, not during NFP. So that's my outlook. I'll start posting a picture format of this when I wake up in the morning, and I will set on the chart during the afternoon. I'll attempt to trade this buy from down here. So thank you for listening to this long lecture.